panel, an expert panel, to discuss the state of the economy and, of course, the budget. Could we actually see politics hijack budget, and whether or not we're on track with the economy after the Eco Survey? Our special panel includes Ajit Ranade and Divakar Gupta, who are joining us here in our studios. And we also have a perspective coming in from Mr. B. Muthuraman, who is joining us live, as is, of course, Sunilkant Munjal. Mr. Muthuraman, I'll start with you first. A pulse on what the industry really expects at a time where today we didn't get much of a credit policy, but we got enough of politics to tell us that tomorrow's budget could well be hijacked.
Look, one policy document is not going to change the image of India as an investment destination. It requires a series of measures. It requires a series of policy documents. It doesn't get time in 1 year. It doesn't get done in one policy statement or in one budget. But what I saw, for example, in the railway budget, this year's railway budget is actually a very good, progressive, bold budget. And if you look at the railway fare increase, which is a marginal railway fare increase which has been done, or which has been proposed to be done, and which has not been done for 10 years, and Indian passenger freight rates are one of the lowest in the world, freight rates are one of the highest in the world. And in a situation like this, on the back of a marginal increase of passenger freight rates, there's a big hue and cry, and there is a big political issue that is getting evolved. So all this is actually a big cause of concern, that we are not able to put forward the strong measures, not the populist measures, and we are leaning more and more towards populistic measures, which is not good for the country.
Mr. Munjal, Mr. Muthuraman here talked about what happened in the budget, in the railway budget, but what about what happened after the railway budget? Do you believe that politics could derail this union budget as well?
You know, I'm hoping it is not, because if this government is to make any big bold move, I think this is an opportune time, because post this you start to get into the big election mode, and they're right in the middle of the government right now. And we've had enough, enough lack of tough decision making or decision being made and not fully getting implemented. And so I'm hoping that this will be an action-oriented, truly growth-oriented budget. But there is clearly some concern about the ability at this moment of the government, especially due to the situation regarding both the allies and the opposition.
Right. You know, that's the question that everyone has on their mind. And I think for once, Ajit, many corporates are coming out and saying, well, this is your only chance. If you let this become a populist story, then what are we going to be left with? I mean, are you as worried as some of these corporates?
No, Shelly, actually, I feel that there is enough that the finance minister can do without causing so much ruffling of feathers. For example, the economic survey today acknowledged that the industrial slowdown is the main concern. So that's the main focus. And if he, for example, keeps excise and service tax rates on hold, I don't think that's going to displease. It's not a politically... I mean, in fact, if anything, it'll raise fiscal concerns, but I don't think that is something...
But you don't think any move of doing a bit of a hard talk during this budget could trigger off a little more political instability, as it has been doing in the last 48 hours?
I don't think so, because a lot of the decisions that can be taken in the budget speech tomorrow, in fact, do not, as I said, need to cause ruffle anybody's feathers. For example, trimming subsidies, removing overlaps, rationalizing the centrally sponsored schemes, 10,000 crores there, 5% tweak in fertilizer subsidies. I don't think that's politically infeasible.
But you spoke about trimming subsidies, but that will also mean cutting down all subsidies, cutting down fertilizer subsidies. That's not going to be easy. That may not be politically, acceptable.
No, please remember that 1 lakh crore fertilizer subsidy, a big portion of it goes actually to foreign producers. So there is a way to tweak it to reduce that. I mean, this is not going to poor farmers. And they're talking about taxing diesel vehicles, the high-end luxury vehicles. I don't think there is a political problem with that.
Right. Divakar Gupta, the economic survey speaks of an economic growth target of 7.6% for the next financial year. Are you buying that?
Well, going by the past 18 months or so, where we are looking a distinct slowdown on capex, it looks a little hard that 7.6% will get achieved. That's not really that great a worry, because you can miss numbers by a little amount. The worry really is that if those are the numbers on the basis of which budget revenues are going to be projected, then your eventual shortfall in the budget could end up being higher than it is actually going to be projected. So that really is the bigger risk. Otherwise, in the short term, I think it's a question of a balance between fiscal consolidation and investor confidence, making investment grow. And there, as Ajit just said, the finance minister can do a lot which will not ruffle any feathers. That is to promote private investment and give SOPs, give tax breaks, allow for more, incentives for industry to come up with a cleaner and a more quick policy and decision-making dispensation, which doesn't affect really any of the so-called populist
But realistically, is this really the banker inside of you saying, or do you think truly we're going to see some sort of a hard talk by the FM? He could do these very easily if you look at just an economic mind speaking, but you think it could be challenging for him to toe that line at the moment?
It's very difficult to double guess that. And obviously the party and the FM would have their political compulsions, which I guess we won't understand as well as they do. But,
But could the RBI have helped today by cutting the rates, for example? I know they're not connected really, but somehow the sentiment would get boosted should the RBI have cut interest rates.
I don't think RBI's rate cut, had there been one, would really affect sentiment. Sentiment is going to be driven by the budget. It's going to be driven by the improvement in the investment climate, which brings about improvement in sentiment.
Right. I want to get you in, Muthuraman, as well, because how much of a challenge is the industry facing today with respect to interest rates? Because, many believe that an interest rate cut at this point would have come handy. Do you think, would you agree with that assessment?
You see, the industry's slower growth rate this year compared to last year has been due to several factors. The problems of land acquisition, investor confidence, the interest rates is one of them. So the more sort of easing that you do in several of these factors, it would definitely help. So an interest rate cut would have definitely helped.
Sunil Kant Munjal, the economic survey also talks of 2.7% growth on manufacturing. Are we already slowing the wheels down, and there's very little that the budget is also going to do to give an impetus to manufacturing? What's bringing the industry to a grinding halt?
I think there are two parts to what it's saying. On the one hand, it's saying we should do a whole host of things. It almost reads like a memorandum the CI would give to the finance minister. He's talking of the APMC Act, he's talking of labor reform, he's talking of all kinds of land reforms. So from that point of view, it sounds fantastic. But the reality is, we've heard this earlier in the surveys, but not seen all of it reflected in policy later on. As to the slowdown in manufacturing, it is real, actually. You can see, and it's been happening over time. There are two concerns here. One is capital formation has dropped. So not only is current manufacturing down, but we're also not creating enough capacity for the future, which means when the economy does turn around, as we hope it will in some time during this year, that we will hit a wall in terms of capacity, and that could cause a further complication in the future. The current slowdown, I think, partially is to do with the global slowdown, and partially the extreme squeeze that we had on the funding. The cost of funding today in India is clearly about the highest in the world. And this is at a time when in Europe and US, they are at historical lows. They've never been so low, the cost of funding has never been so low in 350 years in Europe.
That's something you hear every day from people who come to take loans from you. But realistically, the investment cycle has come through now for 12 months with no pickup. There is no sign that there could be a turnaround in that cycle, at least for now. Is the financial system giving you that signals in terms of the loans that corporates are taking? Is there any change that you're seeing?
No, I think credit demand remains moderate. And at the top end, most corporates don't seem to be really very bullish about starting new projects or making new investment. And definitely interest is one of the input costs. But I would think as far as capital investment is concerned, it's really climate and sentiment which drive it. Costs are high in India, but rupee costs are likely to be high. Real costs may not be that high. And in any case, these costs are sustainable. especially on infrastructure and capital investment. But sentiment and continuity of policy
if the
is
budget,
necessary.
let's say, addresses the issue of fiscal consolidation considerably well, given the political situation, then that climate could certainly see a bit of a boost. Do you think that's what will make people come back to borrow?
Certainly, and I think it will crowd in investment in the private sector, it will improve liquidity, and it will give a Reserve Bank that much leeway to do some more easing.
So you think that the next round of rate cuts will happen only once there's a concrete roadmap for fiscal consolidation that the RBI has been talking about?
Absolutely. I mean, inflation and fiscal consolidation.
But will you buy whatever the finance minister says on fiscal consolidation? Last year, when he set a target of 4.6%, many in the market thought he was really not serious about that target. And look at where we've landed ourselves.
But look at it this way, that last year's projected increase in expenditure was supposed to be only 3.6%, when GDP itself has grown at 14-15%. So that slippage and really has happened only because of oil prices. So I think so long as the fiscal deficit is of high quality, there's a quality and the quantity. If it's high quality, infrastructure oriented, due to things like excise and holding the excise and service tax, and remember there are two very distinct non-tax revenues available to him. The capital markets, they're doing well, disinvestment, and secondly the 2G auction. So there is room.
So disinvestment, there is anticipation that he's going to actually reduce the target from what was 40,000 crores to 30,000.
He's already said that in the Rajya Sabha, so I think 30,000 crores, and which is very realistic given the status of the capital markets today, and the 2G auction. Together, this is like 1 lakh crores right there.
So it's like saying under-promise and over-deliver, Mr. Gupta. Is that what we think today Indian economy has come to?
Well, I mean, if you under-promise and over-deliver, what could be better? But delivery, I think I would fully agree with what Ajit is saying. It's not so much the fiscal deficit as the quality of the deficit that matters. So if you take oil and fuel, together these subsidies are in excess of 2 lakh crores. And what could 2 lakh crores do for you? It could actually upgrade the entire irrigation infrastructure of the country. It could add 15 to 20,000 megawatts of solar power. And it could actually upgrade most of the back end which is required for agriculture. The supply chain, storage, assaying, processing, everything. So, and that would be value creating. That it would be fine to have a fiscal deficit of even 5.7% if those were the investments to be made.
Yeah. Mr. Munjal, everyone here talking about the quality of the fiscal deficit. Really, as you move into the next 12 hours, what do you really hope that the finance minister will do, particularly since you talked about the dismal state of industry led by manufacturing? What would be the one or couple of things that you want him to deliver on?
Well, I think on the monetary front, we've done enough. We need to focus on the fiscal policy, which is create additional incentive for capacity creation, give more higher depreciation, encourage more research. Even if it's temporary for a few years, we need to give an extra kicker for additional capacity creation to industry, especially manufacturing industry. And it's clear the manufacturing industry has a huge multiplier effect on the economy. All three are conflicting targets which the FM needs to meet tomorrow, which is kickstart growth, manage government expenditure better, further raise revenues, and I hope that he does not announce any new social scheme which he does not have the ability to fund. I hope any scheme which is currently ongoing becomes more efficient, and also that any new scheme that gets announced is pre-funded and not, and we don't look for funding later on and don't take it from the black box of the general account of the budget.